Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So after sleeping for the whole day, market showed some volatility during the last few hours on Friday. Overall, we had a very dull week. There was not much craziness, volatility in the market throughout all the pairs. But during the closing hours, we saw some movement on the chart of gold, dollar, and other pairs as well. So gold closed at 1750. This is the last traded price of gold. So let's try to understand what are the trading opportunities for the coming week. First of all, I would like to take you to the weekly chart of gold. So this is a weekly chart of gold here, and as you can see that right now gold is forming lower highs on the weekly chart. Whenever gold is trying to go up, it is unable to cross the previous high, which signifies the presence of sellers in the market. And you can see that the same thing is happening here again. So after this big bullish candle, gold faced some selling pressure again. So this showed that yes, sellers are still very much present on the chart of gold. If we draw the Fibonacci here, then we can see that market has just reversed, or market faced resistance around the Fibonacci 38.2% retracement level. See, this was the 23.6% and this is the 38.2% Fibonacci from where market showed reversal. And one more important thing that we need to focus here is that previously this was the support. So previous support became resistance, and we have Fibonacci, Fibo 38.2% retracement level. So that's why it became a very strong resistance for the market, and we saw market reversing from there. And if I take you to the daily chart, then on the daily chart we do not have much information. Simply we can see that around 1800 level, we have got some resistance in the form of a dynamic resistance in the form of 200 moving average. So the daily chart is showing the 200 moving average is standing around 1800 level. So yes, high chance of market reversing. And on the weekly chart, we can see that 1800 is holding a very important place, a very crucial place, because previous support is becoming resistance. Plus we have Fibonacci, and then we also have, you can see, the 50 moving average around 1800 1810 level. So if we combine all the factors here, so 1800 level will be very important on gold. I was going through an article and you can see that gold price forecast XAUSD cleans above 1750 after dismissal US housing data. XAUSD consolidates around 1750, awaiting a fresh catalyst. Means it needs something to boost the market right now. The gold market is looking for fresh factor that will boost the price, and right now we don't have any. So let's try to find out what are the trading opportunities or possibilities on the chart of gold right now. So market closed at 1750. Right now I'm in the 1 hour time frame. So market closed here. As you can see that the 1750, we have the red line, the 200 moving average. So market is getting first of all the psychological support around 1750. I have already discussed in my previous videos that these round numbers work as psychological support and resistances. Hopefully you remember if you follow my channel. So first of all, market took support at the psychological support of 1750. Then around 1750 we have the 200 moving average as well. So it acted as support on Friday. So the market opening will be obviously very important, not only for gold but also for the chart of DXY. As we all know, DXY plays a big role. So DXY's chart was more or less silent. DXY's chart was more or less silent. You can see that DXY still failed to cross the minor resistance of 107.20 that we have talked in our previous videos. So on Monday after the market opening, if DXY breaks this level, then we will see further downside, small downside on the chart of gold. If we see DXY crossing 107.20 going towards 150 level, 107.5060, then we will see further downside on the chart of gold, because we have the next big resistance on the chart of DXY around 107.60 to 108 level, because of 200 moving average again plus previous support becoming resistance here. I have already shown in my previous videos. So on Monday, if market starts going up from here, okay, if market starts going up from here, if the volatility is low, okay, if the volatility is low, then 1755, yes, 1755 may act as a very minor resistance for the market. Okay, this one. Why I'm using the word minor? Because see, right after the market opening, we have a resistance here. And see, when you have an immediate resistance just at your face, okay, then the chance of breaking the resistance is very high. Okay, so as a result, 1755 is not a proper resistance. Just because it was previously acted as support, it may act as resistance. Okay, the time will tell. Okay, the market opening will tell. We cannot be too sure that whether it will act as resistance or not. Okay, but so if you want, then you can avoid it as well. But 1770, okay, 1770 has a higher chance of acting as resistance, or 1762, 63. Why? Let me show you. First of all, we have, you can see the blue line, the 50 moving average working as dynamic resistance here. How do we get the confirmation? Because you can see that whenever market is going up, okay, it is getting the resistance from here. So we can expect if market goes up, then it can reverse from the 50 moving average. If it reverses just like the previous times, you can go for a sell position. On the other hand, you can also look at the 1770, okay, 1770 as the resistance for the market. If you're wondering why we're considering 1770, then let me show you. See, this is again we're using the Fibonacci here. Okay, you can see around 1770, around 1770 we have previous price rejection from above. Okay, we have previous price rejection from above, as well as we can see Fibonacci 50% retracement level. See, not 70, around 1768, 69. Okay, so if we combine all the factors here, then around 1770 there is a high chance that if market goes up, market will face some resistance. Okay, so right now gold has got two good resistance. First of all, around 1770, and next 1785 to 86. So if market goes up, you can consider taking a sell position if market reverses from this level here, because right now we do not see any big buying move or any fundamental factor that will push the market towards the upside. So if market goes up, and if you see that price is reversing, market is struggling around this level, market is showing hammer kind of shooting star kind of a pattern, or any good price rejection from above will give you the confirmation that you can go for a sell position. Okay, on the other hand, right after the market opening, if you see market going down, observe the volatility of the market. See, volatility plays a big role and we cannot deny that. So if you see market is low volatile, then you can expect the market to take support around 1746, 44. Means 45, 46 level, market may take support. Okay, because of previous price rejection from below. And we have Fibonacci here again. I think I have already shown you guys. See, we have got Fibonacci here again. So if the volatility of the market remains low, you can definitely go for a buy position around 1746, 44 level. If market breaks it, if market breaks 44 level and starts going down, then just avoid the market. I will come down on Monday and I'll tell you what should be your next strategy. But if you are an experienced trader, then you can follow your own strategy. But if you are a beginner, new in the market, and your capital is very less, then try to trade on the levels that deserve your capital. Do not trade here and there. Respect your capital, protect your hard-earned money. Okay, so if market bounces, if you see market is low volatile, then you can expect 1744, 45, 46 level to act as support. If it bounces, go for a buy position. At least you can expect a profit of 40 pips. If it breaks it, leave it, no need to do anything. I'll tell you what should be your next strategy. And then we have the next big support around 1730 to 25, because you can see I have already mentioned the reason here. Resistance is equal to support. Already I have been talking about this level for a long time, so I don't think I need to discuss the importance of this level, because this was previously the resistance for the market. So right now we can expect that the same resistance will now be acting as the new support. Okay, so this is it. Hopefully you understood. Bye bye, take care. Please follow proper risk management. Okay, this is my analysis, I can be wrong as well. Bye bye, take care.